Hey guys, welcome back to my channel. I have decided to quickly repeat this video because the first one was not as clear. There's something I was doing wrong, but now I have fixed it. So initially, I was talking about a pattern that stops you out from the market. A pattern known as an expanding flat. Like I said earlier, I said that I got this pattern from a strategy called Elliott wave theory, which describes the market in waves. So there's this particular pattern called an expanding flat. According to Elliott wave, this pattern has three waves: wave A, B, and C. Okay. So in an uptrend, the market makes higher highs, higher lows, higher highs, higher lows, higher highs. Now this is where the problem is. This pattern, instead of going higher to make another higher low, it comes back and surpasses your previous support and stops you out from the market before proceeding to where it was going. So I want to show you how to trade this pattern, because as you can see, if you are breakout, if you're using breakout strategy, this pattern stopped you out at this resistance area. I mean, you bought at this resistance area and the market stopped you out. When it stopped you out, most beginners or even intermediate traders would think that this market has broken structure and now it wants to go down or it wants to sell. But shock on anyone who was selling the trade, because a few moments after the market starts to buy again, then most people will think the market is manipulated or something. But in this video, I just want to show you how to trade this pattern. So what you do when you see this pattern, first of all, label it A, B, C so that you don't get confused. So after, take your Fibonacci tool and draw from B to C. All the details are in the first video. If this video is short or if you don't get to get all the details, you can visit the first video, but the video quality was not as clear. That's why I'm repeating this video. So draw your Fibonacci tool from B to C, and then take your trend line and place on the middle of the 50% mark. The 50% mark is, if you can see this dot on the Fibonacci tool, that's where your 50% mark is. Put it there. That is 50%. This is 0, 25, 38, 50, 61, 78 is somewhere here, then, yeah. So once you have your trend line there, let me delete this. So now, I'll also delete this one. So when the market crosses above the trend line with a body, buy back into the market, okay? And target 161.8%. Use your sorry. I'm doing it the wrong way. So we draw our Fibonacci. Yeah, I think that's it. It's from B to C. Yeah. So this is your target, 161.8. You can go to your charts and look for that pattern and try what I am telling you. You will come back and like this video. You don't even need to like this video before. Go and look for those patterns. Do as I've told you, backtest and see. Then come back to my video and like this video. Similarly, on the downtrend, it's the same thing. The market makes lower lows, lower highs, lower lows, lower highs. And when this pattern is forming, stops you out. You had your stop loss here when you were selling because this was your resistance and you were targeting your support. It sells a little after a breakout, then it comes back to stop you out. Then after it stops you out, you think, oh, the market is buying, but then it sells back and stops you out again. So it's the same thing we did here. Just take the Fibonacci tool, draw it from B to C. Here we are drawing it from down. We are drawing from B to C. Here also B to C. The only difference is we are drawing from B to C is up to this level, which is down here. And this one we are drawing from down to up. That's how to draw Fibonacci. I'll just demonstrate for someone who doesn't know how to use this tool. So draw from B to C. The rule is draw from B to C so that you don't get confused. B to C. B to C. Then as usual, our trend line. There. Can even change the color. Let's put color. Can do color blue so that we don't get confused. The black trend line was the one that we used when the market was buying. Now when the market is a sell, we are using this blue trend line. So the market sold back. So when it crosses the 50% mark, which is this blue trend line, you sell and target 161.8. Okay? And that is how you B to C. We draw from B to C. And this should be our target. Let me just use this trend line. Yes, this should be your target. And this is where you enter the market. This is a lot of pips. So if you see this ratio of your target compared to your stop loss, you can see that it's double. Your gains are double your losses, just in case. The risk to reward ratio is probably 1:2 or 1:3. So it's a good strategy. Consider this strategy in your trades and I'm sure you're going to make money. So yeah, that's it about this video. If you want more details, just go to the first video and watch it, even though it's not as clear, but it's a bit detailed than this one. So yeah guys, thanks for watching.